Hello, welcome back to another video. In this video we will talk about the accounting equation in detail. So first of all, we have the accounting equation written down here. These are the assets, liabilities and the owner's equity. Basically, according to the accounting equation, asset is equal to liabilities plus owner's equity. Let us talk about these assets, liabilities and the stockholders equity in detail. Here we will start discussing the assets. What are the basically assets? Here we write the definition of assets. An asset is a resource that has some economic value to a company and can be used in a current or the future period to generate revenues. Basically, what are the assets? Assets are the economic resources. And these economic resources are used in the present or the future to generate economic revenue. So here we discussed assets are basically of two types, current asset and the non-current asset, but we will discuss this current and non-current asset in our next few videos. Now here we will talk about the assets, and if we talk about the assets, a plane is asset, chair is asset, fan is asset, and different machines and factory, everything is asset. These are the examples of assets, though some of them are current asset and some of them are non-current asset, but we will discuss about current and the non-current asset in our next videos. Here the land, building, car, machinery, they all are the assets and we earn economic benefit in future. Let us suppose that we purchase a machinery costing 2000 rupees and we produce some of the products using that machinery, and this machinery will produce about 20 products in a day, and we sell each product of 200 rupees, and it ultimately results in 4,000 of profit. So basically this machinery that we have purchased of 2000 is now earning future economic benefit by producing the certain products on daily basis. Now if we move further, what are the basically liabilities here? What are basically liabilities here? The liability is a legal obligation that is arising due to the past business events. Let us suppose that we carry out some of the business events, like we run a business, and in the same manner we are paying salaries, we are paying rent, we are paying bills. All these are the expense of the business, and these are the liabilities until and unless they are not paid. So this was the definition of the liability. Liability was basically obligation due to the past events that has occurred, and we have to pay for these events in future. Until and unless it is not paid, it becomes liability on our business. Everything which is payable is our liability. Let us suppose it's payable rent that we have used a building, and payable for the phone bill, and loan obtained from the bank for the business purpose that we will use these loans for an infrastructure or for creating a building or for buying a delivery vehicle, or we have to pay the salary. All these are the obligations that we have to pay to the end person or the end user. These are basically the liability. Now here we will talk about the stockholders equity. What is basically the stockholder equity? Stockholder equity is the amount of asset remaining in the business after all the liabilities have been settled. It is calculated as the capital given to the business by the shareholders, which is known as the opening capital plus the donated capital. That is, we can say that opening capital and the capital brought in business and the earning generated by the operations of business, which is known as profit. We will add these stuffs less any dividends. Dividends are the drawing. We will talk about this. And what is the stockholders equity? It is basically the opening capital capital brought in the business by the shareholders, or the share brought by each partner, plus the profit and less drawings or the dividend that is being provided to each of the shareholder. Now here we will derive the equation. How do we derive the equation, and how it is proved that asset is equal to liabilities plus owner's equity. So here we will move to this. Now, as we have started our derivation of the accounting equation, A for asset, D for drawing, E for expense, L for liabilities, C for capital, and R for the revenue. So as we move to the next slide, asset plus expense plus drawing is equal to liability plus capital plus revenue. That is our initiating point, and now we will rearrange and we will move the expense towards the revenue. As E moves towards the revenue and the side changes, then the revenue becomes subtracted with expense and the equation comes with profit, as the revenue minus expense becomes equal to profit. So this will be the actual new form of the equation, and once the revenue is subtracted with expense, this will be the next form, and the asset plus drawing is equal to liabilities plus capital plus profit. Now here it was the earlier form of the equation, and now we move by rearranging drawings, and we will move drawings from the left side to the right side, and the drawings becomes subtracted from the profit. So this will be the another form, that the capital plus profit minus drawing, which we will work upon. And what is basically the capital can be divided into two forms. Either it can be opening capital, or it can become the brought in capital by the shareholders. So as I mentioned earlier, that the capital, either both opening plus brought in capital plus profit minus dividend and the drawing becomes equal to owner's equity. So this we will replace with owner's equity. So the ultimate form that comes in, asset is equal to liabilities plus owner's. The final form that comes is asset is equal to liabilities plus owner's equity. Now if we move towards the next slide, here it says that asset, equity and the liability, or the liability and equity, they are interchangeably, whichever you write earlier, that doesn't make a difference. Whenever there is a fall or the decrease in asset, whenever there is a fall, first of all, if we say whenever there is a fall in the right hand side, there will be equal fall on the left hand side. So both sides becomes always equal. When there is a decrease in asset, there will be decrease in equity, and there will be decrease in the liability. And when there is increase in asset, there will be increase in equity or increase in the liability, or of both. This thing we clarify here. Asset is equal to liability plus owner's equity. Let us suppose their assets are two, one equal to liability and one owner's equity. Both sides are same. In order to make them, let's suppose there is a fall in asset. Asset is equal to 1, and now liability becomes equal to either 0, or it will be liability 1 and owner's equity 0, or it can be fall in both liability and the owner equity, but the equation at the end on each point remains same. Now let us suppose that asset is equal to plus owner's equity. Asset increase 1 and 1. Now asset becomes equal to 4. It will be 2 or 2. It will be 3 or 1, or it will be 1 or 3. All the equation at all points remains same. It can be a case that there is an increase in the liability or it can be increase in the owner's equity, or there can be increase of both liability and the owner's equity in case of increase. That's all from today's video. Hope you have understand this lecture. In my next video, we will talk about different accounting formats in the general ledger, trial balance, balance sheet, and the profit and loss accounts. Thanks for watching my video. Have a good day.